And you guys are live.
Thank you.
Hello, Merav. How are you?
I'm good. How are you?
Good. Off to a late start, but we're better late than never, right?
Exactly. It's always better late than never.
So where do you want to begin? There's so much going on. It's hard to figure out where to start, right?
Yeah, there's a lot going on. There are some good news, there's some bad news. It's all over the place. So I'll let you start.
Okay. Let's see. Should we start? I always like to start with the bad news first, and then end on good news, because we should always end with optimism. So I think so. I don't know that there's bad news. I think that there's still the same in U.S. landscape. Still a lot of uncertainty. We have a new administration. We probably have Gary Gensler as the SEC chairman. And we probably have Brimmer as the CFTC chairman. We know we have Janet Yellen, et cetera. So hopefully we can get some clarity on rules, and we might be able to put behind us some of the FinCEN stuff that Mnuchin was trying to deal with at the end of his term. That luckily the industry put together some huge response and on unhosted wallets and more.
Right.
Be able to revisit that in a more measured way.
Yeah. Well, I mean, there's a little bit some misconception. I mean, if you just mentioned Yellen, I mean, her latest, even just about, what was it, less than a week ago, in the meeting that she had, she even in her introduction, she mentioned again that cryptocurrencies is mostly used for illicit transactions, which is a little bit a misconception that I can see that even when I teach my students, the first thing that they ask, it's unsafe, it's risky, and all kinds of things like that. And I think that when Yellen and people in her status, as mentioning things like that, then it creates that misconception in the public that if she's saying it, then probably she knows. And that's something that I hope that is going to be addressed and corrected, because just yesterday on CNBC, when I think John Demers from the Justice Department was interviewed with regards to the hack or the cyber attack of North Korea, and he basically said that there's that cryptocurrency is not as opaque as people might think.
Yeah, but as we know, neither is cash, and so I think that. The emphasis as Mnuchin was going out, and seems to be the thread that Yellen has picked up, is on the illicit activity that happens, whether it's for in contravening the Bank Secrecy Act or for players like North Korea, Iran, et cetera. And this is not a new thing. It existed before cryptocurrency was there, and it was much more difficult to trace. Now, the government actually employs a number of the top companies, whether it's CyberTrace, Chain Analysis, Elliptic, to do a huge amount of analysis for them all the time on all the cryptos, to be able to determine if there was any wallets that were using it for pornography or other things. And a big pornography ring was busted, where they announced that this would not have been able to have been busted if it had been in cash or credit card or other kinds of transactions like that. And so right. I think I agree with you completely. They give a misconception, not only to the people that are listening, but to the broader public about the underside of all illicit transactions. There will always be illicit transaction because, unfortunately, they're bad actors, and they will find ways to funnel funds for their activities. it happens to be that they get caught with crypto.
Yeah.
And maybe that's why it sounds like it's more often in crypto in recent, but we get them, which is different than, I'm not saying we never get them with cash, but it's different than with cash. It's much more difficult.
Right.
And so, yeah, so that was the FinCEN thing. I think that Canada has its second ETF.
Mm-hmm.
My guess is, I don't know what yours is, my guess is that we'll probably get one in the US. I'm hoping 2021. It's very possible. The SEC will be busy with all of the things that's gone on with GameStop, et cetera. But I think that Gary Gensler coming over from the CFTC, where he clearly understands the futures, and one of the issues on the ETF was settlement, he'll be able to point to exchanges that settle crypto futures and say, well, that settles every day, and that's a regulated market, so maybe we can make some compromises here. So I'm quite hopeful that for something the industry wants, I don't have my own skin in that game, but the people want it. I'm pretty sure that we'll be able to get past this with our Canadian neighbors doing it and Gary coming to the SEC. Your thoughts?
Well, when I saw that Canada has already approved an ETF, it seems to me that it's probably going to happen sooner rather than later in the US as well, even though we already know that they are not ETF but ETPs in Switzerland that has been for a long time, not just on Bitcoin, but on other cryptocurrencies and a basket of cryptocurrencies. So Switzerland has already had it for at least a couple of years. So this is not new there. But, people would say, but Switzerland, it's like the Silicon Valley of blockchain. So that's expected. But at the same time, we don't, they always say, regulators, it's not the first time. They always say that we don't want to fall behind and we need to lead the innovation. The US has to be, the leader. And if you want to be the leader and you don't want to fall behind, then you better, do, or at least, try to get closer to what is done in places like Switzerland or Singapore and even Canada now.
What's interesting is that I was on a Clubhouse a bunch of times, and the Bitcoin maximalists are not in favor of an ETF. They're purists.
I agree with them.
They don't think that people should. They don't want to stop something from happening, but they say if you want to buy something, buy Bitcoin, because ETF isn't going to give you any Bitcoin. And if you want all of the properties of Bitcoin, meaning the decentralization, the freedom to have your own money, and all of these other kinds of things, you don't get that with an ETF.
Right.
And so they're like, we don't want that, and we don't think people, we think that people should really stick to the pure asset. So I found that to be quite, like ironic in some way, in that many people talk about the ETFs, but yet the Bitcoin maximalists, for them, it's not something that is favored.
Well, I can understand where they're coming from, because if you think about the maximalists, they're thinking more about what Bitcoin as a blockchain, as a network represents, as a use case represents, rather than what it became, like, a store value or investment or an asset. They don't view Bitcoin as an asset. They view Bitcoin as a network, as a place where to transact. That's what maximalists are, because they believe in whatever the Satoshi paper represented, which is creating like a financial system.
Yeah, so, I think the narrative now for a lot of them, and this may be the people that are more into holding the Bitcoin, is that the dollar is the fiat, and the dollar in particular, with all the printing of money that's going on, is devaluing all of the time, and that this is the only way in which you can have a long-term financial security. And that's why you would have this instead of an ETF. So I think there are probably different maximalists, some that are more into the store of value and others that are more into the blockchain per se. But it's interesting to hear these conversations. And you're a professor and I'm a professor, and I'm sure you as well as myself want to give the students lots of different angles. So I try not to have too much of my own opinion, and that's why I invite other people to come to class so they can hear the range of opinions in this industry, of which there are many.
Yeah, there are definitely many opinions, but what I try to do, at least, because I am a believer, I'm not a maximalist per se, but I am a believer in the blockchain technology, and I'm doing research on that. I've been doing research on that for quite a while. I mean, not just in the crypto market, but also the blockchain, and also trying to understand how to create the right mechanism and the compliant mechanism. So, and because I am a believer in the technology, and I do believe that will be the future, then I'm trying to kind of take the conversation into the positive of what blockchain represents rather than the negative. Because everything there is a negative, and I don't want them to focus on what's not working, but rather to focus on what's working and what can work. Because we are at the beginning. It's a very kind of new technology. There will be hiccups. I don't know if you are a technologist, but I am. So, we all know that, there are always hiccups until we get some product out there. And
the hiccups in the technology, because I teach mostly law students. One class has a few business students in it. The hiccups in the technology end up for a lot of the lawyers that are counseling projects or protocols in, how we're going to handle this, or they see what happen in other protocols, and then they have to extrapolate for their client, or for if it's their company, the general counsel, how are we going to work around these issues or safeguard for these issues. So it's a very interesting place for lawyers to be, and because you have to really, the good lawyers really understand the technology. Can they write the code? Some, yes. But they're there to help the businesses go from a startup to a protocol to a decentralized one, if that's what they're doing, and along the way be able to feel that they're on solid grounds vis-a-vis in the United States, the regulatory framework, which is a complicated one because there's so many agencies. So I think for lawyers, I think it's an incredibly exciting area to be in because it's new, and you have to be adept in so many areas, because since there's no such thing as a crypto lawyer per se, they have to know securities law, and they have to know about the commodities law, and they have to know about banking law, and all these different rules, the travel rule, all these different things that come into play, and there are constantly new agencies that are popping up along the way and saying, "Hey, I want something to do with that."
Yeah, I mean, but we have to understand that this is a technology. I mean, first and foremost, before we're talking about Bitcoin as an investment, a store value, or whatever. And we have to focus on the technology. We have to focus on the benefits of the technology that it has, not just as people, but as society as a whole. I mean, and that's what I'm, because I teach, to different levels. I'm teaching, for the more quantitative ones. I'm teaching for the business, for the MBAs. And I want to expand to them, the use cases, the benefits, how they can use the blockchain. I mean, forget about. I mean, every discussion they always kind of move into, Bitcoin is going up or down, but I don't want the discussion to focus on that. I want the discussion to focus on the technology.
Yeah, I think you're 100% right. I think that it gains more notoriety, obviously, on the front pages of papers and other things. And actually, it's helpful that they know at least that it exists. Whereas a couple of years ago when I started, they were like totally newbies. So I think that's helpful. Look, we rarely discuss the prices, but we do have a lot of current events that come in. Of course, we talked about Tesla. We talked about GameStop, because GameStop, in my opinion, interesting to hear yours, was very relevant for blockchain, because if the surprise for so many people, which we were not surprised about, was the T+2 settlement. And of course, in the blockchain crypto world, it settles instantaneously or close to instantaneously. And so that was a very interesting conversation. Unfortunately, it happened right at the beginning of the term. And so I didn't have, but the students were very engaged in it, and all of them had lots of opinions. But it's good for them to see real world events where blockchain and crypto, can maybe be very good solutions. Did you talk about that in your class at all?
Yeah, definitely. I mean, of course, that when GameStop happened, and especially when Tesla, invested the 1.5 billion, everyone got excited because whatever Elon Musk is doing, everyone is following him, which is a good thing. It's a good thing that someone like him that has so many followers really starting to believe in the space. So that's a good start. And also, who knows, maybe that will be like a pointer for other technology companies to follow suit. We don't know. And we already saw that, PayPal and Square, for example, already invested in Bitcoin way before Elon Musk. But first of all, they haven't invested 1.5 billion. They invested maybe 10 million or something of that range. So it wasn't like a big sensation. And also, like, there are smaller companies, I mean, relatively speaking to Elon Musk, because Elon Musk is more of a figure that everyone likes to follow.
Well, he's got some competition now with Michael Saylor in that, everybody's like taking out another $1 billion at no interest to buy Bitcoin. That's an unbelievable trade, and he's writing the playbook for other corporations that don't have a charismatic Elon Musk following, and mostly controls most of the stock. So I think that we have a lot of great examples for the upbeat situations that underscore where we thought for a long time we've been going, which is for more institutional adoption.
Right. And the thing is that, if I think about, something that I had a conversation in class, because I'm teaching in the business school, is that if you think about it from a perspective, like, the reason why Elon Musk put his 1.5 billion, because he had a lot of cash on his balance sheet. And it's like, usually when companies have like a lot of money on the balance sheet, they buy back stocks. So the conversation is like, investing in Bitcoin will be a better alternative than buying back stocks, because that's what companies like Apple or Microsoft has done for years when they have so much cash laying on the balance sheet, which in fact a lot of shareholders were against it.
I'm not a proponent of when you have extra money, buy back your shares.
Yes, and there are a lot of shareholders, and you probably know who they are, and they, kind of like advocated against it and criticized it and said, "Oh, you should, invest. You should do something with this money rather than buy back stocks or give it back to us as dividends, if anything." So, which made sense, and I think investing in Bitcoin is another alternative. First of all, I believe that Bitcoin, with the volatility, long term speaking, not the short term, probably going to do well. So that's probably
for those companies, they're not taking a trader's mentality. They're not looking. Right. They're not looking for a 5% gain and to sell it out. They're looking for this as a diversification of their treasury. Right. And they have, and it's not a whimsical decision. It's not like, hi, I'm looking at the prices and let's buy some now. They have to get approval. Their method, there's rules in which they have to do by their bylaws. Musk had to go through his audit committee, and then they had to file with the SEC because they're regulated companies. So it's not, they don't do these things lightly. And so when they do it, other companies and of course other institutions that do whatever for those companies, they do law, they do banking, they do proxies, they all look at this and say, this is not one, but this is now 2, 5, 7. And before you know it, we hear, other things. We've heard about Mass Mutual buying 100 million, Guggenheim Partners, which didn't buy, they bought because of their own agreements. They bought a Grayscale. So each one is picking within their own ability of what their controls are and their agreements are to get exposure to the asset. And I think that's the very positive news for the industry. And it's a validation for people that have for a long time had to, talk to people quietly and slowly about what does this mean and how can it be used and why is it valid, etc. It doesn't change some of the trajectory. You still have to, open an account, do the KYC, AML, do all of those kinds of things. If depending upon your orientation, getting a wallet, all these things are learning steps that are not necessarily easy, and people struggle with. And so, that all of that will eventually, there'll be other options and things that are a little bit easier, but I don't think it should be too easy because it's a secure asset that you want to be able to hold yourself, and you don't want it to be, in any way easily hackable.
Right. I mean, I do. I mean, there are a few things, that I do, and also I see that as a development in the industry. One is that in my classes, I teach about the technology also. Even for the MBAs, I explain about that, and I explain, in fact, how to open an account and how to create a wallet, how to download that to this cold wallets and things like that. So I kind of try to educate them if they really are interested. And it's funny, I have some students, kind of ask me after class or want to talk with me and ask me even more about how to invest and, where to buy. And they're getting, especially now with everything that's happening, with the prices and Elon Musk and everything. So they're getting more excited. So this is one thing. And the other thing that I'm kind of excited about is, the fact that Visa and Mastercards, which are very, the largest credit cards globally, are now getting into allowing payments with crypto. And Mastercard in particular, what I like about what they say that they're going to do is that instead, usually now when you pay, whether with PayPal or even with Square, then there's a conversion aspect of it. And this is why people are always asking me well, it's volatile, even if I pay with Bitcoin, then
there's also a tax aspect.
Sorry?
There's also a tax aspect.
Yeah.
That's going to have to be sorted out.
Exactly. So what I like about
coffee, you don't want to be having to pay.
Right. And this is something that
report that to the IRS that you're converting from, you're using Bitcoin, and therefore it's a taxable event. And now you go and you buy coffee, you use a Swipe or a Venmo or whatever you're going to use, you bought coffee. Accumulating all of those receipts for your taxes, which would be really unwieldy.
Yeah, and that's, I think, that the tax code, and I think the tax, the IRS, I think they are thinking about it, because I read somewhere that they say they kind of classify between investments and whether you're paying for salaries or something like that. That they had made a distinction about how you approach the taxes there. But what to the point of Mastercards, what I like what they're trying to do instead of the conversion, I don't know exactly how. They haven't really specified how they're going to do that, but I can kind of envision what they're thinking about, that they're going to, in fact, connect directly to the network. So you're basically not doing the conversion, but, maybe with some kind of a bridge, like between the systems, that you can connect. If you have a wallet already of Bitcoin, then you can directly do this payment through Mastercard as if you're doing it on the network. So I think that also will mitigate the tax issue, and also make it much more easier for those who already have a wallet in Bitcoin and can and kind of like seamlessly transact like that with Mastercard if they.
Yeah,
If,
I think
if they
that
will.
it's kind of like be careful what you wish for. I mean,
Yeah.
we wished for institutional participation, and I worry a little bit about that we end up being overwhelmed by the same institutions that were for a long time in the centralized financial world. I mean, I'm not, Mastercard, J.P. Morgan now, Morgan Stanley, PayPal, etc. I don't think we would be fair if we don't also just bring up, the also, which is always the ghost or the boogeyman in the room, for all of the legislation or the rules. I've worked a lot on the EU ones, also in the United States, which is Facebook's Libra, now Diem. I mean, it seems to me that most of the mentions or any of the proposals that are based on stable coins or any kinds of maybe e-money also are really aimed completely at the regulator's fear of the Libra Facebook project. So I think that that's a real overhang on the stablecoin industry. It's not so much on Bitcoin per se, but it's there out
Yeah.
there, and then of course you have China already testing their central bank digital currency. People are concerned about that.
Yeah, there's a lot of talks these days about the CBDC, the central bank digital currency. I mean, there are some investigations going on almost in every country, every central bank, whether it's the ECB, even here in the US. I mean, they are investigating that. The Fed has at least 2 projects that they are investigating. So we have to see where it goes. I know that one of the concerns, I think even with the survey that the consultation that the ECB, the EU has done, one of the concerns is privacy.
Of course, because they have a whole different regime on privacy than we do here. They have GDPR, which most, companies are aware of. I don't know that, a lot of Americans are. But it was done before blockchain really became something that was much more prevalent. So yeah, they're working on how do you reconcile their privacy with it. Should we talk about DeFi a little?
Yeah, we can talk about DeFi.
Have you incorporated that yet into any of your classes?
My primary research is on DeFi, so I'm a finance PhD. So yeah, DeFi, and that's definitely something that I talk a lot in the class. But I do believe that whatever application that you're going to create, that any financial application that goes on the blockchain has to be compliant. Compliant can be built into the technology. It just has to take some time and thoughts on how to do it right. Of course, all codes, it's at the end of the day, it's a software, it's a code, and everything has to be audited appropriately. And so there's a lot of things, I think that needs to be done before, people just, kind of like launch any application on Ethereum.
Yeah.
So that, and there is a way to do it, and I'm sure, and that's one of the things that I'm working on.
And there are a lot of protocols that are working in one of my classes that we do the class that's on smart contracts and decentralized finance. We just started, last week was the third week on smart contracts. And so we'll start from there and build a base and get to DeFi. We'll have 2 classes on DeFi. So it's really exciting, and it's exciting being a professor in this subject because we have to change our syllabus all the time. Not only for new cases, and we're going to follow this term a different case. Last term we followed Telegram. Telegram is settled. We'll talk about it, but we'll follow probably. Kick was settled. We'll talk about it a little bit, the ruling, but in a different way than when it was active. And so I guess the active one now is Ripple, and we'll look at that in slightly differently than the other 2 because they have different points of view for the securities law and just for the industry in general. So I think it's exciting to change your syllabus. It's nerve-wracking when things happen and all of a sudden it's so, there's so much to talk about, but we still have to cover the territory of what we were supposed to cover in the class and make room for all these new events.
Yeah, I mean, that's what I love about teaching this subject, that basically every week before the class, I update. Because I update based on new news, like, whatever happened with the Mastercard, which was just recently. So I added that to the class. Something that happened with Visa, I added to the class. I mean, so even before they come with their own questions about, I heard this and this on the news, I'm already bringing it to class. And accordingly, kind of like tying it up to what we already learned or about to learn. Because I want them to be engaged, and the way to get them engaged with whatever is happening is to make it relevant to what is happening with the technology, not just what regulators are doing, but also what companies are doing.
Yeah.
And the new protocols and the new project and all kinds of use cases, whether it's in business or privacy or social media or healthcare, and everything is so exciting. And so I just want to put the emphasis on what it can do rather than talking about all the, like the bad news, so to speak.
I think that, you have to talk about all the news. So what I do is I've done this for a long time. We have a private Telegram group. And part of the course is for participation. You're supposed to post articles and comment on the articles, and then you have to comment on something that one of your fellow students posted or commented about, either in the readings or in a news item. This way it keeps it really current. And after a couple of weeks, the students get the hang of it, and they really enjoy to find articles and different, looking at podcasts or other things, and then start posting about what they found and what they discovered and the news item, and whether it was interesting or whatever their opinions are. And that's just an open forum for them to do.
Yeah, this is a great idea. I don't teach it for years. This is just my first year with the MBA, second year with the undergrads. So I'm kind of trying to adjust to what works with the students. So that's a good idea, what you suggesting, to create this kind of Telegram group. But as of now, I'm trying not to bring it to class and then start a discussion with them. So at least, open it up to everyone and to connect it to whatever we already studied. And I'm also.
And do they do a paper, or do people do papers, or do they do exams?
I do assignments and final project. Yeah.
So, okay.
It seems more relevant. Relevant to me than just ask them questions about technical questions, because the idea is for them to think about the applicability and the implementation. And only through projects and I
completely agree. I'm completely. People have done amazing papers, gaming, art. That whether or not Ether 2.2 has the risk of being a security. Ripple, Kick, Telegram. I mean, they've done all up and down. Some people are interested in more of the social blockchain projects, and I'm not there to chill any of their inquisitiveness. They just need to get the topic approved,
Right.
and try and start to flush out what the overall idea would be. I would just want them engaged in a subject matter that is important, because I think that also from everything that I've heard, I mean, so many people from my classes have gotten jobs on the basis of talking about the fact that they've taken courses in blockchain and digital assets, and so they have a differentiating factor that's more current than just saying, I really love my securities law class, which is very, very, very important to be able to understand a lot of the blockchain protocols. But it's like one step beyond it. It's really started down the journey in order to be able to have a conversation with the partner that's a securities lawyer about the issues that might come to pass for one of their own clients.
Yeah. I mean, I teach mostly for the business school, so it's I do co-teach a course with in the law school with Professor Buseva. So we teach, kind of like the business aspect and the regulation. But most of my classes are in the business school. So for me, it's the focus is on the business use cases, and if it's the quant people, then it's the analysis and understanding how to analyze the data, how to analyze network data, like what chain analysis is doing. So I'm kind of like teaching them to do things like that and how to look at things.
That's great.
So this is the approach that I'm taking, and they are benefiting from that. I'm also bringing speakers that from the industry that give them their views. So
what's so interesting also is in my own work, and sometimes it comes to class, the different jurisdictions, not only within the country, our country here, but also obviously overseas, and from whether it's in England has a different regulatory framework and a different attitude, Switzerland, which you already mentioned, Luxembourg. Some of the exchanges are the combination of Luxembourg and Bermuda, which just put in a whole regime that really defines and delineates what are for some of the exchanges, the security digital tokens, which is important, and that's an area that I hope to see grow with some more clarity from the SEC. And I think that maybe GameStop will push that in that direction, because that is one of the key attributes of security tokens, is that they can settle quickly. And if the SEC will streamline some of the regulations that are currently in place that are barriers to entry, then also we'll have some more competitiveness. I mean, the DTCC will have to be willing to modify and modernize. And also there's some of the other companies like Broadridge, which controls the proxy solicitation, and it's become very, very centralized. There'll be startups and others that will do that. And the governance tokens, I think, could be very helpful in that whole proxy world, and voting in companies. And once we know for certain who owns the shares at any particular time, it will be actually able to really have governance in a functional and honest and trustworthy way.
Yeah, I've been an advocate for tokenization. I mean, that goes to security tokens. A long time ago, I even wrote an article about the benefits of tokenization almost over a year ago. I do see that the benefits. One is that the idea of that it's very It's fractionable. I mean, you can basically invest like 0.000 in any asset. So that's kind of like democratize almost any asset and any investment. If people are talking about that, and all the idea of like buying a piece of a share, like what now all kinds of brokers, including
Yes.
so you don't need that if you have tokenization, right? It's already built in the way that what a token is. So that kind of like takes away all the kind of other cumbersome layer of how to buy half a share, which you basically can't do that on the stock exchange, but the broker is doing for you, and they have to create like kind of a trust for that. So there's all kinds of regulatory issues that behind
and as we know, the shares aren't really yours or in your name.
Exactly.
And they're settling at T+2, and then your broker could have a capital requirement that would, if you didn't read the small fine print of the terms of the deal, you might not be able to trade. And we saw that story play out right today.
Exactly. And this is why I advocate for tokenization way before GameStop, and just mentioned.
Yes, and it's I mean, the tokenization, in my opinion, would have been assuming that the SEC would give some green lights, would have been pressed more seriously by many, but you can't trade it right away. And so there is a very short-term mentality in which we want to trade things right away. And so the whole segment of this part of the blockchain business has been slow to take off. But I believe that GameStop would be an accelerant in this. I mean, it's a series of events. GameStop made sure that there were, begot Robinhood crisis, that now we'll get some modification of the rules. And I do think that tokenization, whether it's in securities or other things, will be more likely. Real estate, people have been talking about real estate for a long time. Other kinds of private agreements, LP agreements, that are all which we know are securities,
right,
but could be more liquid and more tradable. And I think that would be fantastic.
Yeah.
Because why should people be stuck in their assets and have to sell it at a discount because there's liquidity to the person that's the general partner, which is what, as we well know.
Yeah. So, and even, even if we're not talking about real estate, even if when you're trying to buy like a Tesla today is like $800, right? Or over that even. And what if, you're a student who don't have $800, but you still want to have a piece of Tesla?
I think Robinhood lets you do that.
Yeah, exactly. But as you just mentioned, that there's all kinds of legal issues, behind the scene that they don't know. But here it's like you really own it, with tokenization. It's really yours. You really have that piece and it's yours. And it's not through Robinhood or any other, whatever legal other things that are going in behind the scene. And it just there's more transparency for that, for sure. More transparency, more, it's going to facilitate everything that has to do with and I think that people will feel more comfortable in the system when something like that will come
to fruition. Have you looked at all about, in terms of tokenization, have you looked at all about what's going on in NFTs and how exciting it is? So for example, Top Shot, the NBA Dapper Labs partnership is really exciting. All of the art marketplaces, fantastic musician 3Lau, doing incredible things with tokenizing his in NFTs, his music, and auctioning them off. I mean, I think the creativity that I hear from the artists is really amazing, and is blossoming as they can figure out how they use blockchain as a means to track their revenues or get secondary sales, or with a piece of secondary sales where they never would have before. And I think that's very exciting. We'll need to figure out how you price the stuff and so that it's trading reasonably. And if they want to collateralize it in some of these protocols as well, to be able to know what the prices are in a real time or semi-real time basis, to know that the collateral is worth what they say it was worth. But it's really amazing the amount of energy and creativity that's being unlocked.
Yeah, and I think that artists are. I'm not surprised that artists, are probably one of the first, to see the benefits with blockchain, because artists, have been a little bit. They suffered a little bit. I mean, because they have to pay the managers and the agencies and all the public. The music companies and so they can control over their art, and so if the blockchain kind of like give them the voice to own whatever is theirs, without having so many intermediaries. If we're talking about intermediaries, they have so many intermediaries that that take a cut. So for them, I mean, I'm not surprised that they were one of the first, to see the benefits, because they always have been vocal about that. Many artists, I mean, just think about Prince, many years ago.
Well, there were two: Prince, the musician, and also Richard Prince, the visual artist, and his appropriations. And even Andy Warhol with his appropriations, and having to deal with the courts and the laws and everything in that regard. So I think that we're being told that we have to figure out some kind of closing statements or things like that. So I guess. What are, I don't make predictions, that's not my style, but I would say that the same thing I said in a recent CoinDesk article, which was that I would hope that this year with the new incoming administration and in all of the different regulatory agencies, that they could find a consistency, that they could collaborate, and that they could provide clarity, which I think would be amazingly helpful. For the projects. That doesn't mean that everything is going to be magically understood, but it'll be easier to navigate. And there are a lot of very smart people, both on the business and the legal side, that have crystallized the issues and are very good at seeing what are the specific ones that come up with all these different protocols now that and they can clearly articulate to the regulators where we should be, how we might be able to get there, and in a consistent and transparent manner. So I think that's if I was going to close on something, it's the same thing I wrote about recently, and I would say that would be great to see that starting to go down that pathway in this year.
I second that, and I would like to maybe add to that I'm very optimistic about this technology. I do think that this is a future. I do think that DeFi is a future. It just needs to be done cautiously and with compliance and security, and not just rush into things. Not from I don't want regulators to rush into all kinds of proposals that don't make sense, and I don't want developers to rush into launching protocols that then create all this bad publicity or to the industry, to the technology itself. So
that's right. Everybody should think about the fact that their project could have a spillover for other projects, and make sure that they've dotted their I's and crossed their T's, because it's a small community, but the spills and other things are megaphones in a big way. So
yes,
let's work together and create a network and fantastic protocols and use cases.
Yeah, exactly. And think about the benefit that this technology could bring to society and the economy globally. And if you focus on that rather than this particular project that you just want to launch because you're eager, just to show what you've done, and think about, the bigger picture, then I think that
I think we're getting in that direction.
Yeah,
well, it's been a pleasure talking with you, and I hope we speak offline and visit one another's classes. It would be great.
Yeah, I would love that. I would love that.
Be safe, and we'll see each other in person hopefully soon.
Yep. Thank you so much.
Thank you. Thank you.
Thank you.